Good day, guys. Today, our topic will be on liquidity. Today, we'll be talking about liquidity. Although sent a I sent a video explaining liquidity, but I'll just top this one to make the playlist a standard one. So today, we'll be talking about liquidity. And what do we know liquidity as? We know that liquidity is money. Liquidity is simply what moves the market from a high to a low to a high. That movement is liquidity being chased. It is liquidity that is being put into the market that makes it move from point A to point B. And we have different types of liquidity. So basic liquidity tells us, like, shows us this. We have this case scenario as liquidity. So sometimes we have this case scenario whereby you're having stuff like this. Then you have cases where you have stuff like this. And you also have, so yeah, basically this. So basically, basic liquidity tells us of, teaches us trendline liquidity and equal highs and lows. This is trendline liquidity, like this. This is equal highs. These are equal highs and equal lows. But this is not what I want to teach you guys. I believe many of us already, all of us should have knowledge of trendline liquidity and equal highs and lows, old highs, previous daily lows. All those they are still forms of liquidity. They are used widely and they are used to read price action. You can use those type of liquidity to read price action. So I want to use the advanced type of liquidity that is normally used when picking out trades. And the first type of liquidity I'll be talking about is the inducement liquidity. The inducement liquidity. So what I'll be talking about today is the advanced type of liquidity, which is the inducement, structural, and the engineered liquidity. Although I'll just be explaining the inducement and structural. I'll be explaining inducement and structural liquidity. So inducement liquidity is basically a smart money trap that the market sets for early buyers or early sellers to trap in early buyers or early sellers before actually activating the real move in the actual direction that the market wants to move to. And it is a common mistake most traders usually make before they now later start correcting themselves. And I'll go straight to showing us how we are to spot and see inducement liquidity. First of all, you want to see something like this. You want to see a sweep. Then after that sweep, you want to see a break of structure. After this break of structure, we want a pullback. Now, like this, we already have a sweep, a sweep, and we have a break of structure here. We have a break of structure here. So we have a sweep and we have a break of structure. Now after this first break of structure, market is supposed to pull back, because after every break of structure in either a bearish scenario or a bullish scenario, we are supposed to see a pullback before a continuation. That is real market moves. You understand? That's how market structure forms. That is the creation of higher highs, higher lows, lower highs, lower lows. So we are meant to see a pullback. This is what we are supposed to see. And this pullback is what we call our inducements. We have our inducement here. Now, after this pullback happens, we are supposed to see a second break of structure. Now this is what actually confirms the structure and the setup. Whatever setup you're trying to look for, this is what confirms it. Your second break of structure. You understand? This is what confirms inducements. Inducements will lead to a second break of structure. So we have it like this. We have our second break of structure here. Now let me label them. Break of structure, break of structure. We have this as our liquidity. This is how it's looking now. So you have to see a sweep of liquidity that leads to your first break of structure. After your first break of structure, a pullback. After that pullback, we are now to see market dropping. It's not most times after the second break of structure, market might decide to keep going up, but all those moves are not your business. You can either decide to use your swing structure there and maybe look for buy continuation, or you can actually wait for this to happen. And the best time to use the inducement liquidity and this kind of setup is when you are looking for reversal trades, mostly reversal trades. This is how you see a setup for a reversal trade. After that second break of structure, we are to see a drop and then a continuation, meaning we are going to have something here. This is how we spot inducements. Now I will label this too as liquidity. So this is how we have it. This is how it looks, and this is how inducement liquidity forms. This is an example for inducement. This is an example for inducement liquidity. This is an example for inducement liquidity. This is how it forms. In the case of a sell, this is what you want to see. In the case of a sell, this is what you want to see. So first you want to see this, a sweep, then a break. After your break, you want to see a pullback, then a second break, then market sweeping the inducement, and a continuation. This is how it will play out you have your sweep. Sorry about that. You have your sweep here. After your sweep, you had your first break of structure. After your first break of structure, you have your pullback after your first break of structure. And then that pullback led to the second break of structure, which confirms our setup. Which confirms our setup. And then we have an entry here. Now still label them. We have this, a break, our inducement, and a second break. This is the example. This is how inducement liquidity forms, and this is the entry model for an inducement. When we are using an inducement liquidity, this is how you should be able to see your setup. This is how you should be able to see your setup. Now, I have an example I'll show you on BTC. I think from one of the most recent trade I took. So on one of the recent trades I took on BTC, we had this. So I think I'll hide all this. So this is a fresh scale on BTC, and this is from the 4-hour time frame. Now on the 4-hour time frame, we can identify a lot of break of structures that is making us bearish. We have had a lot of breaks of structure to confirm a bearish order flow. We have a break of structure here that dropped and created imbalance. So this drop now is confirming pure bearishness until we see a close above a swing high before we can proudly say, okay, BTC is actually now bullish. So after that break downwards, we know that is a swing. But we now had something here. Market was trying to retrace up to supposedly mitigate something around 73k or 77k, but it got somewhere and there was a swing high failure, meaning it failed to create a high around this point here, where we had a sweep of liquidity. And after this sweep of liquidity, we know that usually the market is either going to go for the low of that high that was swept, which is this point, like this. And also I had a key level here, or a point of interest that I was waiting to buy BTC from, although I missed the trade. This is how it was looking. So after that sweep, we were expecting to sell BTC, downwards. So after the sweep, I saw a break of structure here. After the sweep, we saw a break of structure. So market break structure here. And then the first pullback was around here. This was the first pullback here. But actually this is not what it used to sell down. There was should I say structural liquidity around there before it actually sold down. So this was not actually where I took my entries from. This was not where I took my entries from. But I think let me show a clear example of where I took my entries from. Let me go to the daily time frame. So on the daily time frame, I saw something like this. After our first break of structure, which is after we saw a sweep up there, this was where I saw a sweep, because this was the clear setup I took. I saw this sweep like this up here on the daily time frame. So I went to the 1 hour time frame. I went to the 1 hour time frame, and after that sweep we had a break of structure. We had a break of structure here. We had this minor break of structure here, or should I say a shift. After that we have our first pullback, which is here. After our first pullback, markets went down to break structure again here, and continuously like that market was breaking structure downwards. So now, given this whole scenario, now we now have a perfect setup. Now I'm to pick the POI that is very close to my point of interest. This was my first entry on BTC for a sell. The first entry I got, this was my first entry. And then now I'll just pick the POI that is closest here. Now I cannot find any other block that is close to my inducement or any breaker block. So what I'm going to use is this fair value gap here. This is what I'm going to use, this fair value gap here. This fair value gap here, meaning we'll enter from either the 50% of the fair value gap, or immediately it just taps into the fair value gap, whichever way you take your trades. But this was the first entry for the BTC sales. You can see a clear example of inducement there. Then we came to the second entry. The second entry, this was what gave me the sweep here. I had a sweep inside here that led to a break of structure. Having that sweep, all I had to do was drop to the 15 minutes time frame or 30 minutes time frame. clarity. Now on the 5 minutes time frame, on the 30 minutes time frame, we have I have this internal break here. I have a market broke structure here and then pulled back here. This was the candle that pulled back after so that was the candle that pulled back after that break. Then after that break, after the pullback, market broke structure here again around this point, giving us double break of structure. Now we can see it's more clear on the 5 minutes time frame. So as you can see here on the 5 minutes time frame, this is how it looks on the 5 minutes time frame. And now the closest POI here too is actually a fair value gap too. A fair value gap from this point to this point here. This was the point of interest that was used for the sell. You can see how it triggered. We have double break of structure, we have our inducements, and then we have our entry. That is another example of the inducement liquidity. And then we move forward. Now at this top side, we know there was a sweep here. You can see how these candles swept each other and started dropping like this. You can see this sweep inside this zone. After that sweep, market just went down to break structure here. We have this break of structure. After that break of structure, we have our first pullback here. And then we have our second break of structure. Now this is for the last entry for a sell that took me to my buy POI. Now we have all this in check. The next thing we need to look for is the closest point of interest to our POI. Remember, your POI needs to have a sweep of liquidity at the top before it becomes valid. Now at this point, we'll just look closely here. Now the closest point of interest, we cannot see any large displacement candle, we cannot see any breaker block in sight. The nearest candle here was this other block. At this point, this green candle here was our point of interest here, like this. That was our point of interest, and then from that point we sold down to this key level at the daily time frame, and you can see the exit. Immediately we exited, market started buying. So this is how to clearly spot inducement liquidity for your trades. You can see how many times we spotted inducement even at this point here. But this one is an example of, this should be an example of structural liquidity if I'm not mistaken. No, this is not an example of structural liquidity. That's not an example of structural liquidity. But these are examples of inducement liquidity. These are clear examples of inducement liquidity. Now, I will explain structural liquidity in the next video. So I think I'll send this one to you guys now.